Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stepping up attacks, the U.S. and Israel conduct their most intense day of strikes yet against Iran, as President Donald Trump warns Tehran against laying mines in the Strait of Hormuz. Oil trades lower on reports the International Energy Agency, the IEA, is considering the largest crude reserve release in its history. And we speak to former Turkish ambassador to NATO, Mehmet Fatih Ceylan, as the widening Middle East conflict tests NATO's borders. It's just gone 9 a.m. across the Emirates. I'm Prasad in Dubai. It is day 12 of the Iran war, and the markets continue to react to the flood of headlines that are coming through. Obviously, oil being the key release valve over here. Yesterday, seeing its steepest one-day slide in 4 years. This initially after President Trump's comments suggesting that the war was going to be over or close to be over in the next few days. And then adding to that, the reports swirling that the IEA are looking to release this extensive amount of strategic petroleum reserves. So something to watch out for markets that have been driving down oil. But actually, what's also been a beneficiary of that is sentiment in global equities. So once again, we're getting a more positive handover from Asian equities overnight, up 1.9%. And over there specifically, what we're seeing is some of the tech names in Asia are performing quite well. They seem to be somewhat shielded, obviously, from what has been happening in the Iran war. S&P futures up 0.4%, and this after a positive close yesterday, too, for Wall Street. So, again, continuing with that positive momentum, keeping a close eye once again on what's been happening to the price of oil. It is so volatile. I was just put up a post now on X suggesting that the 1 month implied volatility on a 50% delta option, so basically at the money, is more than 110%. What does that mean on a day-to-day basis? The oil market is pricing in 6% plus and minus moves a day in oil. This just encapsulates how much volatility we're seeing in that market. And then the USD slipping a little bit today, bucking the most recent trend of actually being a beneficiary of all of the uncertainty in the world, geopolitical uncertainty. The dollar has performed well. Today, it is slipping a little bit. And let's switch over something completely unrelated to the war that I do want to flag to you because it is very important as well, as we started to see ETF dip buyers come through in the S&P. It almost feels like whatever is happening in this part of the world, the shocks that we talk about on supply chains, on the energy system, isn't really affecting the retail mood. And for the first time in a while, you've actually started to see retail and ETF dip buyers come in and buy the U.S. stock markets, and perhaps on hope that maybe this will be resolved soon. So something to think about. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in Hong Kong for us. Winnie.
Yeah, morning, Jumana. As you mentioned, Asian stocks extending gains for a second day on how oil prices are coming down further. And in fact, we are up about 2%, taking its 2-day gains to the most since April last year. And leading gains today, as you mentioned, are some of the technology shares, also boosted by the stronger earnings from Oracle, along with stronger AI demand going forward. Now, with that being said, we are looking at the Taiwanese stock market up about 4%, leading gains in Asia, also with the TSMC sales for the first 2 months of this year coming at about 30% year over year. So that still shows how the demand remains quite strong on that front. And following those gains, we're looking at Kospi and the Nikkei still both up about 2% and 3% each. Now flip the board and take a look at what's going on with some of the technology shares in China, because interestingly, we are looking at Minimax, Zhipu here, both down, and that is coming after our scoop that the Chinese government is now putting bans and restrictions on the adoption of OpenClaw for banks and some of these state agencies, citing security issues. Now, OpenClaw, this new AI agent in China, is really getting a lot of traction with companies and customers rushing to adopt it. And you can see that Tencent here also trimming earlier gains. And this is quite a reversal from yesterday when it released its new AI agent that is fully compatible with the OpenClaw. So lots of uncertainty, and we're closely watching these tech developments in China. Back to you, Jumana.
Winnie, thank you so much for the overview. Winnie Su in Hong Kong. U.S. President Donald Trump has warned Iran against laying mines in the Strait of Hormuz and threatened to blow up any ship attempting to do so. The U.S. Central Command says multiple Iranian naval vessels have now been eliminated, including 16 mine layers near Hormuz. This comes as both the U.S. and Israel are conducting their most intense day of attacks yet against Iran, with the Pentagon saying they will not relent.
As President Trump declared yesterday, we're crushing the enemy in an overwhelming display of technical skill and military force. We will not relent until the enemy is totally and decisively defeated.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, and from Istanbul, Bloomberg's breaking news editor, Patrick Sykes. Stuart, let's start with you. With Central Command there saying that they had successfully attacked, taken down mine-laying Iranian vessels close to the Strait of Hormuz overnight. I mean, clearly this is an effort to deter Iran from harassing any ships that want to pass through the strait. What do we know about the situation of mines right now?
Yeah, I mean, the short answer is we don't. We know that there is history here. The Iran, many years ago, a couple of decades ago, did try and do this, and as a result had, a large part of its navy sunk. So I think they're going to be reluctant to do it. On the other hand, it's not the only danger in Hormuz, because remember, it is incredibly narrow. You have land-based attacks that can take place, as you've seen with the Houthis in the Red Sea. And more importantly, right now, probably the biggest danger to shipping is the fact that they're scrambling the GPS. And that means that, with the AIS systems turned off, these enormous ships that move relatively quickly don't have a lot of time necessary to avoid collisions. So the GPS scrambling, I would say, is an immediate danger.
And Patrick, let me turn to you. What have the Iranians been saying about the passage of vessels through the Strait of Hormuz?
Yeah, it's interesting. Explicitly, they say that we haven't closed the Strait of Hormuz, but they also say very explicitly, that they've made it practically impassable because of safety concerns. So it's kind of a strange ambiguity. All the while, their own ships continue to be able to pass. So they're kind of inflicting the maximum damage without incurring it themselves. So I think from their perspective, perhaps the best of both worlds. They had mentioned the risk of mining in the lead up to the conflict. We haven't really seen it since it started, but we have seen a military spokesman invoke some of those incidents from the 80s that Stuart mentioned, and the military saying that they're waiting for the US to start these escorts, and they know how to respond if they do. So this threat, I think, is still there, even if that extra security comes in.
Yeah, and some confusion yesterday about whether or not the U.S. successfully did manage to escort a ship through the Strait of Hormuz, a deleted tweet from the Energy Secretary. Stuart, let me come back to you and just, clearly the Trump administration is focused on reviving the passage of vessels through the Strait of Hormuz, but also on bringing down the prices of oil. There's another big report that's come through overnight. IEA seemed to be on the cusp of releasing a huge amount of SPRs, these strategic petroleum reserves. Yeah. How much is that going to move the needle?
I mean, certainly you've seen the reaction in the futures market, at least on Brent and TI. So, yes, there is some impact, but I think, looking at our own analysis from our Bloomberg intelligence, they're saying it will have some impact, but it won't be enough to compensate for what's going to be lost from Hormuz with a prolonged shut-in at Hormuz. Again, some conditional language around it. But clearly all these nations are going to try and keep these energy prices under control, because eventually, rather quickly, I suspect, it's going to feed through to the consumer. You're seeing that out at the pump. You will eventually see it in power prices for households. So they need to act relatively quickly just to try and keep a lid on things. Yeah,
especially if we are looking at a more protracted war. Patrick, let me come back to you, because also the messaging continues to be one of defiance coming through from various Iranian figureheads, I would say, right now. What is the objective here? What are they trying to achieve, given at the same time they have sustained and absorbed a huge number of blows from these joint U.S. and Israeli strikes?
I think Iran fundamentally wants to re-establish this deterrence, right? The past couple of years, we've seen this cycle of maybe tit-for-tat attacks, and Iran has tried to respond in a particular calibrated, measured way. We've seen occasional negotiations. We've seen them collapse now twice, and hostilities break out again. So Iran, I think, wants to raise the cost to such a level to the US, to its allies in the region, that it re-establishes that deterrence and makes the US and Israel also perhaps think twice before doing that again. I think at the same time, we have seen comments from officials in the past couple of days saying, you know, we're not interested in talks while hostilities are continuing, right? I think the underlying message there is perhaps if there was some kind of ceasefire, then that's an environment in which we could talk. The caveat is that we haven't yet heard from the new supreme leader, Mojtaba Khamenei. He obviously has the ultimate say on all of these matters, and I think his first public messaging, whenever it comes, will be really key in that direction.
Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, and from Istanbul, Bloomberg's breaking news editor, Patrick Sykes. Thank you both so much. Well, for more on market insights, joining us is Matthew Ryan, head of market strategy at Ebury. You know, Matthew, I'm going to go back to where I was at the beginning of the show and the fact that, you know, on the ground, we're reporting what seems to be a very different situation than how global equity markets seem to be reacting right now. Why do you think stock markets continue to trade positively in the last couple of sessions, despite an intensification of the war in the region?
Yes, well, I think we're clearly seeing a relief rally in response to Trump's remarks that the war potentially could be ending sooner than anticipated. As you say, equity markets have rebounded somewhat. The dollar has also given up some of its gains. I don't think investors will be getting too carried away, because clearly what we are seeing is some rhetorical decoupling, whereby we have Trump's comments, mission complete comments on the one hand, and on the other, we have remarks from other White House officials, Iranian officials as well, that suggest that not only is there no end in sight to the conflict, but we may just be at the beginning of the war. Of course, there's an old adage that actions speak louder than words. While Trump is talking about an off-ramp, actually, US attacks on Tehran have intensified. Yesterday was the most active day of attacks we've seen so far. The Strait of Hormuz remains effectively closed. So we're seeing a bit of a relief rally. I don't think that'll be one that holds for too much longer. Markets will want to see action over rhetoric, and at the moment, the situation doesn't quite compute.
What do you think is the baseline timeline for the war that investors are pricing in right now? Is the assumption based on where markets are trading that the war is going to be over in a couple of days?
No, I don't think so. And I think markets seem to be pricing in a conflict that lasts a number of weeks rather than days. I think the baseline scenario among market participants seems to be roughly, I would say, in line with President Trump's rhetoric. That's the 4 to 5 week timeline that he provided last week. I think that's largely priced in by market participants. So I think as long as that timeline seems to be sort of within reach, I don't think we'll see too much of a big fallout in markets. I think these safe haven flows will be relatively contained. But what is very important, of course, is what happens with the Strait of Hormuz. I think if we continue to see a closure there for any sort of length of time, then markets will clearly react to that.
And obviously, there's been a tremendous amount of volatility in oil markets, massive intraday swings. Yesterday, we dropped more than 11%, and we're getting used to these 10% daily moves in the price of oil. How much is that volatility seeping into other asset classes right now?
Yes, clearly it's having an impact. I think markets are very much wary of what's going on in commodity markets. We're focusing on the foreign exchange market. The dollar is clearly received some strength in the last couple of weeks or so, and that's the number one thing at the moment for market participants is what's happening with oil markets. I think that is more important than anything else. I think, as I said, if the war stretches on for 4 or 5 weeks, I think markets can actually handle that. I think they'll take that in stride, but it really is what goes on in commodity markets is going to be key. I think if the Strait of Hormuz, as I said, if it's remains closed and impassable running into next week, I think we will see some more upside in oil futures, and that will be reflected, I think, in continued flights to the safe havens. We'll think the dollar would do well. The general typical safe havens would outperform, and then risk assets would probably come under a bit of pressure, because at the moment I think we're seeing a little bit of complacency among market participants. As I said, they seem to be reacting more to Trump's rhetoric than the actual situation itself.
Yeah, and if you look at the amount of de-risking that's gone on, it's been pretty stark over the last couple of days. Also, our colleagues at Bloomberg have written about several funds that have taken, hedge funds that have taken a bit of a hit due to the recent market volatility. What do you think were the most consensus positions going into the war that we're now seeing unwinds in?
Yeah, I think markets went into this expecting it to be more of a short, sharp conflict, and typically geopolitical events and episodes don't have long-lasting impacts on financial markets. They tend to be relatively temporary. I think that was generally the base case going into this latest episode. But clearly, what we've seen with the escalation in the conflict, the complete blockage of the Strait of Hormuz, which I don't think was fully priced in. Clearly, the war is having a bigger, more broader impact than I think markets had anticipated. That's why we've seen the rush to safe havens, and oil, which was already pricing in a flare-up in tensions, has continued to climb. We think there's more upside to be had there. And then now all depends on the duration of the conflict. I think if we see one that continues to stretch on beyond President Trump's timeline, then again, that's going to be a big risk for markets, and I think risk sentiment would certainly take a hit.
Matthew, really good to have you on. Thank you so much for joining us. Matthew Ryan, Head of Market Strategy at Ebury. The conflict with Iran is now testing NATO's borders. For the second time in less than a week, a ballistic missile fired from Iran entered Turkish airspace and was intercepted by NATO defenses. Now the alliance is boosting its military posture and is deploying Patriot missile systems near a key U.S.-operated radar site. Join me now to discuss is Mehmet Fatih Ceylan, a president of Ankara Policy Center and the Turkish Atlantic Council, and former Turkish ambassador to NATO. Mr. Ambassador, thank you so much for joining our show this morning. Let's just start with the fact that NATO have started to boost defense systems in Turkey. What do you make of this latest development?
Actually, it all depends on the understanding how NATO functions under such circumstances. I'm sure that all types of contingency planning was in place, given the evolving nature of this widening conflict. We understand it from the deployment of Aegis-type warship in the Eastern Mediterranean, which shut down the two missiles that violated Turkish airspace. So it's a multi-layered defense structure now in action, and I think the missile defense will be strengthened by further measures. So NATO, it's natural for NATO to be agile, vigilant, and ready for such contingencies. And that's been demonstrated in practice in the last couple of days.
Okay. What do you see as the likelihood of the potential involvement of NATO in this war?
It's very unfortunate that these incoming missiles had been intercepted in the air. I believe that if push does not come to shove, NATO would not be willing to involve in this crisis, with the proviso that if there are further attacks of serious nature from Iran to Turkey, then of course Turkey will have to take it to NATO for consideration. There are two options that we have. One option is the Article 4 of the Washington Treaty of 1949. That's the foundational treaty of NATO. It allows allies or the concerned member state to bring such issues to the NATO Council for consideration when they perceive there is a serious threat to their national security. The second option, of course, is that famous Article 5 of Washington Treaty. Yeah. It's like in summary, it's like one for all and all for one. But note that when such questions had been posed, for instance, to NATO Secretary General, he said that NATO will not play a role in this conflict. But of course, he didn't add unless there is a serious attack against Turkey by Iran. I think that would change the ball game if such an eventuality just surfaces, which we do not expect, because I'm sure that both nationally and within NATO there are very strong measures taken, and I'm also confident that all the elements of the contingency planning for such a scenario have been put in place.
Yeah.
So I think it would be much better, for Iran to consider this.
Mr. Ambassador.
Yeah, please.
For sure, there's the threat of that Article 5 being triggered. I just want to take you on slightly, a broader question, because overnight I saw that President Zelensky now has said that he's going to be sending over drone interceptors to support Gulf allies. At the same time, there have been multiple reports suggesting that Russia has been helping Iran with intelligence sharing. So has this conflict become yet another proxy or manifestation of Ukraine-Russia?
Well, I mean, that is one of the conclusions that you can reach. But I do believe that neither Russia nor Ukraine is in a position to get highly involved in this conflict. Ukraine itself needs further contributions to its national defense, and Russia is extremely busy in waging its war on Ukraine. However, I mean, this is the nature of things, unfortunately, that when there is such a conflict which is evolving to engulf the entire area, then non-regional countries, try to explore means of getting involved. It would be extremely valuable, of course, to have the recent technologies produced by Ukraine for use in defending against drone attacks, anti-drone technologies. This is important, but Ukraine itself needs it. But on the other hand, it produces big amounts of drone and anti-drone means in Ukraine. Well, I believe that Russia will try to kind of indirectly help Iran, particularly as you have underlined in intelligence sharing. But to what extent will that be useful remains elusive. I believe that Putin will not try to kind of confront the United States while the United States and Israel are carrying out operations against Iran. So I think he will be very cautious on extending such kind of aid to Iran. And don't forget,
Mr. Ambassador, thank you so much for your time. Yeah, we're gonna have to wrap it up there. Mr. Ambassador, thank you so much. Mehmet Fatih Ceylan, President of the Turkish Atlantic Council and former Turkish ambassador to NATO. Now, the latest confusion over U.S. policy on Iran stems from a now deleted post on X by Energy Secretary Chris Wright, saying the American military had escorted an oil tanker through the Strait of Hormuz. Now, we asked White House Press Secretary Caroline Leavitt about the post. Take a listen.
Can you explain why the Energy Secretary posted and then appeared to have deleted a post on X saying that the U.S. Navy escorted an oil tanker through the Strait of Hormuz?
Yes, I was made aware of this post. I haven't had a chance to talk to the Energy Secretary about it directly. However, I know the post was taken down pretty quickly, and I can confirm that the U.S. Navy has not escorted a tanker or a vessel at this time, though, of course, that's an option the President has said he will absolutely utilize if and when necessary at the appropriate time.
That was posted erroneously. Could it be because of a staffer? What, I guess, will there be any consequences for this? I know you still have to consult, but just generally speaking.
Again, I would defer you to the Department of Energy to answer that question.
And if I could just follow up really quickly.
Sure.
In terms of oil sanctions, the president said that there would be some sanctions. What that would be lifted? Would those be on Venezuela, Russia? Could you give some specifics there and then timing for that as well?
Sure. I know it's something that the Treasury Department and the president's energy team continue to discuss, and they will ultimately consult with the president before decisions are made. I don't have any announcements on new sanctions or the lifting of new sanctions for you today.
So some confusion over that post, and Wall Street Journal reporting that it also led to some losses on an ETF tracking oil to the tune of about $80 million. All of that in the 10 minutes that post was up. Anyway, let's turn to markets now. We are seeing bits of green. The handover from Asia, pretty positive this morning. And take a look at S&P. Nasdaq futures also pointed to open up in the green. European markets seen trading sideways, slightly underwater here. It just feels like these equity markets are pricing in a very different scenario than the scenario that we're facing on the ground right here in the region. And just switching over, let's take a look at oil quickly and where we are. Brent obviously has pulled back significantly in the last 24 hours, now trading just below $87 a barrel, down 0.9% on the day. Yesterday seeing its biggest drop in one-day drop in 4 years. But we're going to talk more about oil, which is sliding as the IEA reportedly proposes releasing crude reserves. We discussed that and the wider risks of the war in Iran with Aathira Prasad from Nasser, Saidi and Associates. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stepping up attacks, the U.S. and Israel conduct their most intense day of strikes yet against Iran, as President Donald Trump warns Tehran against laying mines in the Strait of Hormuz. Oil trades lower on reports the International Energy Agency is considering the largest crude reserve release in its history. And today's big take, Iran's barrage of low-cost drones is forcing the U.S. to dig deep into its arsenal of expensive, hard-to-replace missiles. It's just gone 9:30 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Well, let's get you up to speed on markets. A positive handover from Asian equities. The MSCI Asia Pacific up 1.5%. Tech in focus there. Good day for some of the tech names in Asia. Living in a separate universe to what has been going on in this part of the world with the broadening conflict in the region, the war in the region expanding and operations intensifying over the last 24 hours. S&P futures also leading towards green, up 0.3%, and this after building on a positive close yesterday, keeping a very close eye on all the developments in oil and energy markets. It has been so volatile in the last couple of sessions. Not long ago, well, a couple of days ago, we were talking about oil scaling close to $115 a barrel. We're now down to $87 a barrel. Lots of headlines coming through there. Essentially, one of the ones that we're watching out for, we're going to discuss in our next segment, is the potential release of strategic petroleum reserves out of the IEA and the impact that that could have potentially on the market to alleviate some of the supply pressure that's building. Bloomberg US dollar also slipping a little bit in trade, down 0.2%. Now, it isn't only just about the repercussions of the Iran war today. One chart that I wanted to show you is in the background. While we're focused on developments over here, private credit continues to come under a lot of selling pressure here. Private credit has been plunging, and you can look at some of the proxies, but then also some of the specific private credit funds as well. Blue Owl, Ares Fund Management, all of those names are down about 40% over the course of the last couple of months, and really just signals that markets and investors have been quick to reprice an asset class that had been doing so well in 2025, potentially on exposure to some of these software names, some of the hype around AI being priced in to private credit funds that have exposure to it. So something to keep in mind in the background as we talk about the outlook for U.S. equities, not exclusively, of course, driven by headlines coming from the Middle East. Okay, let's check in on how tech stocks in Asia are faring. Winnie Su is in Hong Kong for us, and I was just highlighting that there are some bright spots in these Asian markets today, and specifically the tech sector is one of them.
Yeah, morning, Jomana. As you just mentioned, tech stocks here leading gains in Asia today. Yes, obviously the better sentiment supportive of these growth stocks, but also with oil prices coming down slightly, that is also supportive of these stocks that rely a lot on energy outputs. And here specifically, you're looking at, for example, TSMC here up about 5% and leading gains in Taiwan and also driving some other names in Taiwan higher. And that's coming after its sales data from January and February, up about 30% year over year, along with Oracle's better than expected earnings, both pointed to still a very solid AI outlook. And beyond that, you've also got Samsung Electronics, along with SK Inc. Canceling a big portion of its treasury shares, and that is coming as part of that corporate governance reform. Now, you also flip the board and take a look at the Japanese assets, because as we mentioned, tech stocks leading, and hence you're seeing the Nikkei 225 slightly outperforming the topics. But we did have a very solid demand coming through for our 5-year JGB sales, and hence you're seeing that the yield falling here about 0.5 basis point. And that is the reason behind this, traders telling us, is that expectations for rate hikes from the Bank of Japan is being trimmed back right now because of these concerns around the war, with Governor Ueda also warning that the war in Iran might actually have a major impact on Japanese economy. And that is also partly why you're seeing the Japanese yen remain weak at around 158 against the dollar. Back to you, Jumana.
Winnie, thank you so much. Winnie Su in Hong Kong. Let's go back to energy markets. Oil trading lower this morning after the Wall Street Journal reported that the IEA is proposing a record release of reserves to tackle elevated prices triggered by the Iran war. That's as an effective halt to shipping through the Strait of Hormuz leads major Gulf producers to cut output. For more, we're joined by our Middle East energy reporter, Anthony DePaula. Maybe let's just start with that IEA report and intense expectation that there's going to be some form of an SPR release to come in the coming days. We know that the G7 are also having a virtual meeting later. How much of an impact could that have on this market?
Yeah, well, clearly we're seeing that in the price coming down, some expectation of more oil coming on the market. The G7 did meet yesterday together with the IEA, apparently when they would have talked about these proposals, talking about the proposals of bringing more oil into the market. And what we've really seen, obviously we saw that huge run-up on Monday in prices, bursting through $100 because of that blockage and the complete halt almost of oil out of the Strait of Hormuz. But what we're seeing throughout is, first of all, a little bit of that residual oil that's still in the market because, it's taking about 2 weeks to get a vessel from the Gulf to Asia. So those Asian refiners are still getting oil that they've previously purchased. And then they're going to have to worry about those other supplies. So they are looking around in the market, trying to find those other supplies. That's what's driving the price up. But what's holding it back a little bit is that wait-and-see attitude. The strait is closed now. Traders perhaps aren't expecting it to be closed for that much longer. They're looking at damage to infrastructure in the Gulf. We haven't seen major facilities damaged yet that would impede production coming back relatively quickly. So that's a positive sign that traders are perhaps looking at, and that's what's holding that price back a little bit.
Okay, interesting. And Anthony, obviously a lot of focus on reopening the Strait of Hormuz. We spoke about what the U.S. has done overnight in terms of targeting some of those specific Iranian vessels. We'll see if it actually makes a difference. But in the meantime, we've heard from many substantial Middle East oil producers about what they're doing to deal with some of the challenges of storage capacity, in addition to potentially rerouting. And that's what we heard from the likes of Aramco yesterday, too. Again, to what extent could that also help cushion the impact from what we're seeing through the Straits?
Yeah, companies like Aramco, companies also like ADNOC, these are huge companies with a lot of assets, so they've got a lot of different parts to play with. So they are trying to bring oil to the market via other pipelines, so that's easing some of that constraint. I should add again that IEA release, the G7 release, if it does come through, that's also going to lengthen kind of that off-ramp for the refiners who will have additional oil coming to the market. Add to that some of the oil coming through the market. Amin Nasser, the CEO of Aramco, is saying they can export about 5 million barrels a day out of the Red Sea coast. Their normal exports are around 7 million barrels a day, so you've got a shortfall there. Abu Dhabi able to export somewhere between 1.5 and 2 out of Fujairah, which is outside the Strait of Hormuz. They're doing closer to 3 normally, so you're seeing that shortfall there already. They do have storage in Egypt in the case of Aramco, in Japan, some in India, some in Korea. So they are able to pull on those that storage to put oil in the hands of customers. We've seen Aramco sell from some oil on tankers. So there are different options, and they're really pulling out kind of all the tricks that they've got in order to keep oil flowing and keep meeting those customer demands.
Yeah. Anthony, thank you so much. Anthony DePaula, our Middle East energy reporter. Well, for more to discuss the global economic implications and regional economic implications is Aathira Prasad, Macroeconomics Director at Nasser, Saidi and Associates. I know it's still early on and the war is still ongoing, so it's really difficult to paint a picture here of what the economic toll is going to look like. But from an economist's perspective, what are the various pressure points that you're watching out for in this war, and insofar as it's going to affect the trajectory of these MENA economies?
Well, like you said, it is quite uncertain at this stage. It all really depends on how long the war goes on for, how wide it becomes, the number of countries that are impacted, and also the depth of the war, right? Because right now, we do not know the scale of destruction. We do not know what kind of infrastructure have been hit. Is it energy? Is it power? Is it just military assets? There has been news reports of desalination plants being hit. These are life-sustaining core infrastructure. So this could potentially take a toll when things go back to normal as well. Because similar to oil, where you're seeing we do not know how quickly the production can come back online, it is a similar case when your critical infrastructure are affected. So even if a ceasefire is called today or in the coming few days, we really do not know how long the economies will need to get back on track.
Yeah. And let me just ask you, as it pertains to, say, a country like the Kingdom of Saudi Arabia, our own Bloomberg reporting would suggest that they've had to cut production by about 2 million barrels per day. They have managed to reroute a big chunk of that, per the Aramco CEO comments yesterday, but it's still, quite a hefty production cut. What sort of an impact is that going to have on Saudi public finances, coming at a time where already Saudi public finances were under scrutiny?
You're right. Already you're seeing there's a differential impact in how things will shape in the region in the coming months, right? Because you have had countries that have already halted production, but you have had Saudi, the Aramco CEO, saying that they're going to reroute through the western port of Yanbu, right? So there are alternative options, say for UAE from Fujairah and so on, but it is still not to the scale that they used to export, right? So there will be definitely an impact on the fiscal side as well. Now, you have already seen that they're spending increasingly on defense, security spending, and so on, at a time when you have lower oil revenues, not just from the immediate hit, but you can also think of the production pauses that are happening now, and that could potentially impact the revenue in the medium term. So you are more likely to see that the GCC will run larger budget deficits in the coming years. So there will be a tightening on how the spending flows. So the giga projects versus development spending versus spending on defense. So this could have an impact on how spending is rerouted in the coming years. But you also have to think in terms of, sorry, go ahead.
No, go ahead. Please finish what you were saying.
So you also have to think of the other side of the picture, right? You have to think of who are the partners on the other side. The impact on Asia cannot be disregarded. You have to think of it as Asian countries which are highly dependent on oil from the Middle East. So you have, say, a country like Japan or the Philippines that are dependent on like 90% of their oil needs are met from the Middle East, whereas say in India or China, which is at 40 to 50%. Now, these countries would see a major impact going forward because not only does it hit their trade balances, but you would also have strong inflation spillovers because the energy component in their CPI basket is quite high. You're already seeing those countries take measures like shorter working days and subsidies being rolled out and so on. So that's another impact that you have to look out for, wider than just the region that's directly impacted by the war.
Yeah, well, to your point there, Egypt, for example, have started introducing fuel price hikes. Are you expecting to see more of the same from other key oil importers in the region?
It really depends on how much they are affected by the current war, right? Because if they have enough storage or sufficient buffers, then it would not be as immediate as what you're seeing in Egypt, the announcement of fuel subsidies and so on. But inevitably, what is going to happen is that the longer it takes for a resolution, the more countries in the region will be rolling out countermeasures, because inflation is a big concern in this part of the world, and we are still coming off the earlier surge in inflation that you had seen, which is slowly coming down, but we're not yet out of the woods. And before that, you're having this immediate hit from the war in Iran. Yeah.
Aathira, thank you so much for joining us today on Horizons. Aathira Prasad, Macroeconomics Director at Nasser, Saidi and Associates. Former Israeli Prime Minister Naftali Bennett says the central objective of this war is to neutralize Iran's uranium enrichment capabilities. Speaking to Bloomberg, he stressed the need to permanently dismantle the program and weaken the regime at its core.
We would very much hope that the outcome of this war is that Iran's regime decides that they're not going to continue enriching uranium, that they're not going to continue producing more and more ballistic missiles. But one way or another, we will always need to defend ourselves against looming threats.
And you've spoken in the past about what a weaker regime would mean in terms of empowering everyday Iranian people. There are no signs yet that Iranian people are once again taking to the streets. Do you think that that can actually happen in the absence of ground troops being committed to Iran?
Look, we cannot tell the Iranian people what to do. We can create the environment that would allow them to uprise. We are weakening the seams of this regime. We're weakening the apparatus. It's growing weaker and weaker, and there won't be a more opportune moment than now. But ultimately, it's their decision, not ours.
You've spoken about striking the head of the octopus, and indeed, we saw that in the early days of the operation, some key personnel at the top, right at the top, taken out. But as we know, there are several layers to the regime's power structure. What would it take to dismantle them?
Well, the head of the octopus is the entire Iranian regime. And if it falls, then all its tentacles will just dry out. It means that Hezbollah won't get the $1 billion a year and will dry out. Hamas, Islamic Jihad, the Houthis, the Iraqi arm of Iran. So if you cut the head of the octopus off, you solve 70-80% of the problems in the Middle East. That's why this campaign is just so important. I've been pushing for this for about a decade now, that we shouldn't be fighting the tentacles. We should go to the head of the octopus, and now we're doing it. And it's the most important and effective, potentially effective campaign that could be.
You're saying that you've been, advocating this for many years now, but are you going to be the politician who reaps the rewards from this, or is it going to be the current Israeli Prime Minister Netanyahu, obviously heading into crucial elections later this year?
this is not at all about politics. And you're right that Netanyahu is my opponent. I'm his opponent. And I think that I should become the next prime minister of Israel. However, on this issue, there is no daylight between Netanyahu and myself, no daylight within Israel, and no daylight between Israel and the United States. We stand together to dismantle the world's biggest nuclear threat, which is Iran.
That was former Israeli Prime Minister Naftali Bennett speaking to me on Bloomberg Television. Now for a look at some of the other stories we're following. Israel is preparing to boost its defense budget by nearly 40 billion shekels to fund the war with Iran. The increase would lift total defense spending to around 140 billion shekels, more than double pre-Gaza war levels. Most of the additional funds will go towards replenishing military supplies and paying reservists. The move is expected to push the budget deficit above its current 3.9% target. Boeing has secured a $298 million deal with Israel to supply up to 5,000 air-launched smart bombs. The company's small-diameter bomb is a guided munition that can be launched by Israeli jets at targets more than 40 miles away. Deliveries are not expected to begin for at least 3 years, and the contract is not linked to the current strikes on Iran. And according to the Financial Times, Israel is preparing for an extended campaign against Hezbollah that could continue beyond the current war with Iran. The report, citing people briefed on the talks, says diplomatic efforts are underway to prevent a broader Israeli offensive, including a French proposal to help disarm Hezbollah. Syria says Lebanon's Hezbollah launched artillery shells at army positions west of Damascus. According to state media reports, the Syrian military has also observed Hezbollah reinforcements moving towards the border between Syria and Lebanon. The U.S. war effort against Iran is beginning to show signs of strain. In our Bloomberg Big Take today, we explore how Tehran's arsenal of cheap, plentiful drones and ballistic missiles is forcing American forces to burn through high-end and hard-to-replace interceptors, with some costing millions of dollars as the conflict drags on. For more, we're now joined by Becca Wasser, defense lead for Bloomberg Economics. This, in many ways, I guess, has become somewhat of a war of attrition when it comes to munitions. How sustainable is this pace for the U.S., given the rate at which high-end interceptors are being used, and how quickly the inventories can actually be replenished?
So this can be sustained by the United States for a very long time because of its incredibly large arsenal of munitions. That said, you might see the U.S. start to use not its preferred missiles and munitions. Already, we have seen the United States use a great deal of some of those higher-end, long-range missiles, as well as a lot of the air defense interceptors that also the Gulf states in particular have needed. And those are really hard to replenish. They take several years. For example, right now, the United States is trying to ramp up from producing just under 100 THAAD air defense interceptors a year, trying to get up to 400, but that's not going to happen until 2030. So the U.S. can sustain this.
All right, it looks like we are having some signal issues with Becca. We will come back to her as and when, obviously very topical, and I would highly recommend to viewers to take a look at the Big Take on the terminal today, talking about the economics of the defense angle with all of this. Becca, you are back. Let me just pick you up on something. You're talking about, the production capabilities, but actually one of the other questions that people have been asking is, how much stockpile is Iran still sitting on? And if you just look at the frequency of the attacks coming through, say, to the Gulf states, at the beginning, at inception, leaning very heavily on ballistic missiles, they've moved towards leaning more heavily on drones. Does that indicate that perhaps their stockpile is running down, or that maybe they're keeping it for the future?
It's probably a mix of both. I think right now, what we are seeing is less that they don't have as much stockpile, although it has been attrited for their missiles, particularly their ballistic missiles, but it's that the United States and Israel have gone after those missile launchers, making it very difficult for them to actually be able to fire these missiles. Drones don't require the same level of infrastructure, and they're much easier to distribute throughout the country to other groups and to be able to fire. So we do see an increase in drone usage for the reasons that there are not as many launchers and delivery mechanisms for ballistic missiles right now.
I also want to bring you, in on the main story overnight. President Trump also warning Iran against laying mines in the Strait of Hormuz, has threatened to blow up ships. Central Command confirming this morning that they have indeed downed ships that had the capacity to lay down these mines. First of all, do we understand the extent of the mines that exist and are already loaded around the strait at this point in time? Do we have a better understanding of what Iran's capabilities are in that domain?
Iran has a lot of mines at its disposal. As of 2019, it had about 5,000 mines that the U.S. Department of Defense had identified. It has probably increased that number since that time. The United States has gone after some of these mine-laying vessels, as well as some of the mine storage. But Iran doesn't need some of these higher and more advanced capabilities in order to lay mines. They can do that with simple, small ships and deliver them, frankly, quite easily. So it's more a matter of, can the United States actually stop them before they're able to lay mines with some of these smaller ships? So I think we're going to see an uptick in some of the intelligence, surveillance, and reconnaissance efforts around the Strait of Hormuz in order to be able to identify those and go after them.
Becca, thank you so much. Becca Wasser, our defense lead for Bloomberg Economics. And speaking of the topic, a line coming through now from the UK Maritime Organization, the UK MTO, saying that a cargo vessel has been hit by a projectile near Oman in Hormuz. And this really just underscoring the security concerns for many of the vessels, the cargo ships, the tankers that would be looking to pass close to or through the Strait. Even at this ongoing period of time, it could be subject to projectiles and to attacks emanating from Iran. So we're still very much in a situation of the effective closure of the Strait of Hormuz, and the ongoing blockage is having a demonstrable impact on global energy markets. Now, one of the stories that we walked into this morning, and we'll see what happens later today, is anticipation that the IEA are going to be releasing a huge amount of strategic petroleum reserves, the SPRs, perhaps even surpassing what they did back in 2022 when Russia invaded Ukraine. But again, as we were talking about with many of our reporters on the show, unlikely that this is going to provide more than just a plaster to a market which obviously is facing increasingly physical constraints. But irrespective of that, we continue to see green on equity bourses today. The handover from Asia Pacific, pretty positive momentum there, as we were speaking about with our colleague Winnie Su. Tech names doing quite well this morning. And then S&P, NASDAQ, Dow all actually pointed to open up in the green this after a more positive session yesterday. The markets, I guess, heralding potentially the sooner end to the war, which is what President Trump seemed to highlight. But actually, if you look at what's happened in the last 24 hours, and the intensity of the operations has increased, not decreased. In terms of data, for anyone still watching data out there, we do get the U.S. CPI reading later today, this on back of a weaker than expected non-farm payroll on Friday. So we'll see whether that actually has an influence on interest rate expectations. And finally, let me just leave you with a snapshot of where oil is trading at this point in time. It's been extremely volatile. Brent just shy of $89 here, $88 now flat on the day, WTI at 84. That is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.